Here's a look at the latest events happening in financial planning. Brought to you by JenniferLangFinancialServices.com, where we help American workers and small business owners prepare and protect their retirement portfolios from stock market loss. We specialize in annuities, 401k and IRA rollovers, indexed universal life insurance, and small business owner 401k retirement plans. Please remember to click the like button and subscribe to catch all of our financial news and retirement planning updates. Let's get started. While individuals have important decisions to make regarding Social Security, married couples have the most options when it comes to claiming and coordinating benefits. For the purposes of determining benefits, the Social Security Administration, SSA, recognizes all marriages, as well as some civil unions and domestic partnerships, depending on state law. If you are married, you are eligible for the higher of your personal benefit amount or the spousal benefit amount. The spousal benefit can be very helpful when one spouse has significantly lower earnings or doesn't qualify for benefits at all. Let's say Pat and Taylor are married. Pat's earnings history provides a good Social Security benefit amount, but Taylor never earned enough credits to qualify for benefits. Taylor may receive up to 50% of Pat's primary insurance amount, or PIA, the benefit amount available at full retirement age, which is between 66 and 67 depending on birth year. For Taylor to receive the full spousal benefit, Pat must file first, at full retirement age or older, and Taylor must be full retirement age at the time of filing. If Pat files for benefits early, this will reduce both of their benefit amounts. If Taylor files for benefits before full retirement age as early as 62, it could reduce the spousal benefit to as little as 32.5% of Pat's PIA. With one exception, filing early would not reduce the spousal benefit amount if Taylor were caring for a qualifying child, a child under 16, or receiving Social Security disability benefits. Keep in mind that the spousal benefit is based on one spouse's PIA. In this example, even if Pat waited until age 70 to secure a higher benefit amount, Taylor's spousal benefit would never be higher than 50% of Pat's whole benefit amount at full retirement age. Social Security will always pay out the individual's earned benefit first. In our example, Taylor did not qualify for a benefit and had to rely on the spousal benefit. However, if Taylor had qualified for a benefit of $1,000 and Pat qualified for a benefit of $3,000, Taylor's full spousal benefit would be $1,500. Social Security would pay Taylor's $1,000 benefit and supplement that with an additional $500 based on Pat's earnings history to reach the total of $1,500. The following video looks at how taxes affect Social Security benefits for married couples.
The Browns and the Smiths are married couples who have each determined they'll need $70,000 in annual retirement income. The Browns claimed their Social Security benefits early and received $24,000 in benefits each year. To make up the shortfall of income that they need to cover their everyday expenses, they also withdraw $46,000 from an IRA each year. The Smiths, on the other hand, delayed claiming their Social Security retirement benefits and therefore receive a higher annual benefit of $40,000. They withdraw just $30,000 from an IRA annually to fund the rest of their living expenses. The Browns' provisional income is $58,000, $46,000 in IRA withdrawals, plus one half of their Social Security benefits, or $12,000. The Smiths' provisional income is $50,000, $30,000 in IRA withdrawals, plus one half of their Social Security benefit, or $20,000. Because the Browns withdraw more IRA income than the Smiths, their provisional income is higher, which will ultimately cause a greater portion of their Social Security benefits to be taxed. The result? The Browns will pay more in taxes each year than the Smiths, and the higher tax bill could adversely impact and shrink the Browns' portfolio over time.
In many cases, spouses' earnings histories are different, but not enough for one spouse to be better off with a spousal benefit. If this is your situation, it may make sense for the spouse with the higher benefit to delay filing for as long as possible, up to age 70, to secure a higher benefit. It may even make sense for the spouse with the lower benefit to claim early and take a reduced amount if that makes it feasible for the spouse with the higher benefit to delay filing. Maximizing the higher benefit will not only increase income in the later years of retirement, it will ensure a higher survivor benefit if the higher earner dies first. This can be important. Surviving spouses can receive 100% of the benefit amount the deceased spouse was receiving or was entitled to receive at the time of death, as long as all requirements are met. Requirements include criteria like the marriage lasted at least 9 months or the death was accidental. Therefore, even if the surviving spouse had filed early, meaning their own benefit amount was permanently reduced, that reduction will have no impact on the survivor benefit when the survivor has reached full retirement age at the time of their spouse's death. Spousal benefits can be complex, and decisions surrounding these benefits require careful thought and planning. It's never too early to start the Social Security conversation with your financial professional to gain the insight and information you need to make the most of your benefits and understand how they fit into your retirement strategy. You can also find answers on the Social Security Administration's website, www.ssa.gov. It is valuable to create a My Social Security account on the Social Security Administration website. You can verify your official earnings history and use the SS calculator to get a rough estimate of your expected benefit at full retirement age. It is also valuable to talk to a financial professional, someone who can discuss the many factors that can impact this estimated benefit amount and guide you through important decisions related to filing age and continued employment. Your estimated benefit amount is useful information when considering future retirement income and planning how to address any anticipated gaps between income and expenses in retirement. A fixed annuity may be the right fit if you need to fill the income gap and help plan future expenses. If you are concerned about rising taxes and inflation, if you are in the red zone and you are 5 to 10 years away from retirement, if you are concerned about stock market downturns, and if you are concerned about rising healthcare costs in retirement, get your free Social Security report today. This personalized presentation clearly explains and compares filing options along with a detailed action plan. You will confidently know what actions to take, when to do it, and why. The complexity of various filing methods are reduced to a series of steps arranged by date. Click the link below to get started. If your benefits aren't enough to pay for your expenses each month during retirement, then consider other sources of guaranteed income to cover the gap. Annuities might be an option to look at. After all, they are the only thing besides Social Security that can pay you a guaranteed income for life. Contact us today for more information on Social Security claiming strategies, as well as annuities and how they can benefit you. Together with our help, you can increase your Social Security benefits, maximize your retirement income, and enjoy a comfortable lifestyle with more financial confidence. You can request an initial appointment or quick call to discuss your goals, situation, and explore a working relationship. It helps to have a plan to achieve a more secure future. Get your free Social Security report today. Also, tax-deferred solutions such as fixed index annuities are safe from stock market loss and provide you with protected growth, lifetime income, a death benefit for your family, and liquidity. At JenniferLangFinancialServices.com, we work with over 25 of the top life insurance carriers to find you the best rate. Let us put our expertise to work and find you the best annuity for your age, time horizon, and goals. Get started today. Please remember to hit the like, subscribe, and share buttons to stay up to date on the latest retirement and financial planning news.